I have a record properly. Now, there is many different style of trading. In the whole world of trading, there's only three, the whole world of trading, there's only three major styles only. One, directional trading. Thomas told me about directional trading. When you buy shares or when you long shares or buy CFD or buy futures or buy crypto, spot crypto or spot Euro USD, you are doing a directional trading. When you buy, let's say you buy Bitcoin, you are doing a bullish trade or directional. Bitcoin must go up for you to make money. That's called directional. Directional is always only one leg only, either go up or go down. If you do a directional trade and the thing do not move, okay, ladies and gentlemen, you are going to lose money to slippage. Even your trade is commission free, you still lose money to slippage. Okay, directional trading is the simplest one. I buy to go up, I short to go down. The simplest form of trading. Nothing else to say about it. Okay, next. Income trading is different from directional. Income trading is a form of trading the market don't move also can make money. Depends how you structure it. Market don't move, the market go up by $50 also can make money. Market drop by $100 also can make money. This is called, that's why I call income is passive in nature. That means you do not need be right to make money. As long as you're not wrong, you should passive. You should be able to make money as long as you're not wrong. Okay, so basically this one do not require you to be right to make money. When you, ladies and gentlemen, you do a directional trading, yes, you need to be right. If I buy shares, the share must go up. Okay, if the share don't move or drop, don't move, you go and lose slippage. If the thing drop, okay, lose money. If the thing collapse, lose even more money. So that's why it's called multi-directional or multi-dimensional trading. This one is 100% option related. For those who are my students, you know what I'm talking about. Okay, you can be bullish. You can be bullish for August and you can be bullish. You can be bearish for August and bullish for September or November. So then even multiple time frame. That means what I can option trading. You can do what? July bullish, bearish. August bearish. Okay, the December bullish. Next year June bearish. You can you can trade multi-dimensional or multi-dimensional or multi-directional in many different time frames. Okay, so many different style of trading. One, this is the most popular one. This is what I call scalping. You can see this professional trader now. He looking how many screen? He's looking at 20 different chart patterns. Nothing wrong with it, but in my personal point of view, as a retail trader, you don't bother about it. This is more active trader. Okay, this one is taken in 2013 or 13 or 12. Had somebody having a 2-chart lunch, bring his Acer tablet, look at his MT2. Okay, he's a forex trader. You can see all the patterns here. A Facebook friend. Okay, I've forgotten his now. Then the style trading, this one passive style. Passive style means what? Okay, ladies and gentlemen, means what? And then at the extreme end, you can do every 1 month, do 1 hour. I got extreme places. Every 3 months, do 1 hour. Okay? So, how much time you want to spend? It's up to you. How much risk you want to take? It's up to you. Okay? How much? Up to you. How much minimum time, minimum effort? Up to you lah. So you want to be, I got people now is doing what, $50,000, $100,000 of credit trades per expiry. Historically, they were doing on the 3rd Friday of the month. Now they spread into every fortnight Friday. One each expiry $30,000-$40,000 worth of credits. Sorry, $30,000-$40,000 worth of capital exposure. So which one bad, which one good? All of them are perfectly good. Ladies and gentlemen, it's up to all strategies, like all cars are good cars. It's up to you, the trader, you the driver, to choose the right car or the right strategies for your objective and your budget. Since we check public, no public, then I continue fast. Edmund, Edmund, is it? Are you my friend or you're new Edmund? Don't mind, don't waste time lah. Let's call me lah. You see lah, we can do trading now. Many ways of trading. Shop now we are for the last 10 years, last 8 9 years or so. You can use smartphone to trade. The platform is so advanced now, especially in today's market efficient. For last 8 years or 9 years, we can use what a smartphone, your Android or your iPad or your Google tablet to trade any part of the world. This trade is done. It was done during my last good old days or holidays. I was in Greece. I was able to do some scalping trades using options. So before we go further, American market, American shares is full of opportunities and danger. Here's a screen capture of a trade done our infamous span about 2 years back, January 2021. How a trade this guy can see the P&L make 1 day P&L opening make $247,000 in profit. Okay, these options are for 30 cents for 30 cents out of the money now become deep in the money $16. How I know is in the money by $16? You can see here now, P&L, can see now $15.70. Now in the money by 50 cents. Before that, the thing shoot up by $16. Anyway, just telling you, the danger is there. I said with great danger, with great opportunities come great danger. Our job now, especially those people like Christina's and Charles and a few other people here, are primarily coming here to start off as junior level. Means that I will teach you fixed risk trading. Basically, what you can lose 10 trades in a row and you still can continue trading. Anybody, any questions? So most of you are what you call strategy traders. Besides, use strategies or system to find opportunities to trade. So we call system trading. This is the most so all my 7S or 8S or quick starter class are strategy based. Okay, my thinking trader, see market, trade market, or see monkey, trade monkey, see elephant, trade elephant type of thing is no longer taught at the entry level. It's be taught at the most advanced level now. So before, okay, this one tricky trading here. Now next, the most common type of trader is doing directional trading. Bullish up, bearish down. Based on chart, because of technical analysis, chart analysis, fundamental analysis. So before we go further, what are the key tradables in today's market? The key tradables in today's market is futures, shares, ETF, over-the-counter private or CFDs, etc., and options on shares and ETF indexes. Today's session, we are focusing primarily on options only. Because if options I know you can lose 10 trades in a row and you still will not die horribly. That means you will not get margin call. Before we go further, so off the cuff, you're looking for US trading options. These are the minimum capital to start, so-called starting capital. Thomas, can I retire with $10,000 in options and trade? The answer depends where are you lah. If you are $10,000 options, if you're living in South Africa or Zimbabwe, yes, you can retire it lah. But $10,000 account size to retire in Singapore context or to have lived an international nomad lifestyle is not enough lah. Okay? Okay? So most of the time these are the bare minimum we're looking to do trade now. This option trading got multi different things. We got 4 style or major style option trading. We got directionals. We got pure income. Okay. We got trappers, earning season. We got abnormal volatility, high option premium volatility, multi-dimensional trading. So in today's session, we are focusing primarily on directional trading. Tonight, I will not be covering your earnings. Okay. Okay. Unless you stay until very late. Income trading is also another one I teach under the 7S system based trading. Before we go further, I need to tell you what's the fixed risk versus open risk. Open risk is primarily defined trade your full shares value. Ladies and gentlemen, if you go and buy one lot of Euro US, one standard Euro USD contract, one standard lot is 100,000 euros. The broker may ask you to put in 1% or 5% as a margin, but your margin is not your risk. If you go and buy one lot of Euro USD, that's 100,000 euros. When you go and buy 100 shares of Amazon at $110, that is what? That is 100 shares at $110. That's $11,000. I do not care. You should not take it as your buying power or your CFD margin requirements as your risk management. Okay. For tonight's purpose, I'll be focusing you on fixed risk trading, as trading a predetermined dollar value, prefixed value determined by you before finding opening a trade. No stop loss, no stop loss, no stop loss, no stop loss, no margin, no buying power, no leverage profit. Directional can be hunter referring to day trading, day scalping. Okay, Mr. J here. Directional can be 1 hour, can be 5 hours, can be 5 days, 5 weeks, 5 months, 15 months. The hunter do not hunt for 15 months, correct? Mr. J, understand say now? Okay? Of course, if you are going to on the computer at 9:30 9:33 enter a trade 9:33 enter the trade 9:38 take profit that is called a hunter. That's sniper. That's a scalper. You wrong way. Hunter must be there short and sharp. If you go and do a 6 month trade that is not hunter. That is a fisherman or kelong. So here's a great example. Okay, is the thing obvious? Is the thing obvious and visible now? Open, can you see So we got Alibaba here. We take Alibaba example. Alibaba is a nice cheap company. This one now is $100 over now. When I do this trade, when I do this type of trade, it was somewhere in June. It was $90 over. Anyway, my Alibaba bullish. You can buy 100 shares. The market 100 shares at $94.24 is $9,424. Okay, that's one. Now, of course, you can buy 100 shares with CFDs so called contracts for difference. The margin requirement is about $2,000 only Of course, you can buy a bullish call options for $665, or you can buy a bull call directional spread for $50. So which one better? Let's analyze it. That will depend on your objective. If you go and buy your shares for a long 5 years, 6 years, or 3 year cycle, then buying the options, buying the shares will be the best. If you are doing tactical trading, do a trade for 30 days or 4 weeks, or 4 weeks, 30 days or 2 weeks, then options would, I think, should be better. Thomas, I want to do scalping. Then shares, in this case, shares will be better. Scalping means Thomas, I trade 1 minute candles. I'll enter the market at 9:35. I will get out at 9:38 or 9:42. That is called using shares will be definitely better than options. Because in a volatile market, especially opening bell, option price tend to be extremely volatile with high slippage. So let me show you the difference between all three. Okay, you buy shares. You can see here buy 100 shares of Alibaba, $94 is how much? $9,400. CFD, cheaper, $2,000. But CFD is private broker. So you cannot hold. You cannot convert your CFD's position into real shares and collect dividend. You cannot do that. Okay? So shares will cost you $9,400. How about buy straight call? Share something good, infinite profit. If the great Warren Buffett wants to buy a company at $5,000 per share, I think Charlie Munger wants to do it on the buy the work and buy a share at $300, you have unlimited profit. But then I said earlier, with unlimited profit come great come what we call bigger risk. In this case, $9,400 capital. You can Thomas, if I don't want to buy shares, can I buy options? Yes, you can buy a bullish options. Buy a call options will cost you $6,650. Some is 6,065. Every options like 100 like shares like that is always measured in blocks of hundreds. So instead of buying $9,400, you can go and buy one at $625. Can. Like shares, also infinite profit. Which one better? Well, depends on objective. Next, then Thomas, I'm a newbie. I will start trading. So in this case, why don't instead of putting $9,400 inside, instead of putting $665 inside, why don't you put a trade for $100 inside here? Buy a spread. Buy one call, sell one call. This will be the cornerstone of DDS. Okay, trading system. Okay. So what's so good about it? You risk less, you make more. Thomas, what do you mean by make less, risk more? Excuse me. Look carefully. Your maximum profit for this trade is 50. Your maximum loss is 50. Your return over risk is 100%. Okay, ladies and gentlemen, for your shares, to double, for your shares to make 100%, okay, the share price for this Alibaba must go up to $1,888. Okay, for these options to double in value, the underlying share must go above $107. Okay, $107. Thomas, for this company, then you're 100%. For 100%, for you pay 100%, the share must go up how much? The share must go up to $95 and above. So let's say, which one better? Well, depends on your objective. If you are a seasoned trader with sizable account size trading, then the straight call and the shares may be better for you. But if you are starting out with smallish account, the spread trading will be definitely better. Anybody, any questions? Law, Jess, Edmund, Charles, Christina. Thank you, everybody. So these are the trades available. So end of the day, which one better? It depends on you. If you are a beginner trader, you start with 5K. I think a spread trading better. Thomas, I'm a seasoned trader. I trade with CFD. Now I want to, instead of trading CFD and shares, I'll use option to place. Then buy straight call is definitely better because you are so used to buy the shares. After buy the share is what $9,000. So buy the straight call straight put will be definitely better. If your account size is $5,000, $10,000, or you are a newbie or you are a starter trader with limited experience or have not warmed up properly yet, then my advice to you, start with spreads. So before we go further, ladies and gentlemen, let me give you a sampling. These are some of the strategies for directional trading. Can you all see it here? Can you see all these strategies here have been structured in such a way that is for directional trading. You can buy the shares, Amazon shares at $117.20. So 100 shares is about $11,720. You can buy a straight call for unlimited profit for $10.55. It means $1,055. Or you can buy at a money spread, okay, for 60 cents. Okay? Or you can buy out of the money spread for 43 cents. Or you can buy what you call a boo iron condor. It's a boo iron condor. Means that for you to make money, the market must go what? Market must go up in one direction. It must go up, must be bullish, go up above 118. Okay? Okay, which trade is better? We can discuss later. But all these trades up. Diagonal trade. We buy at the money 21st October, we sell out the money call. Out the money call on 16th of September. The profitability is it costs you $400 over dollars, 455. A calendar is $2. So ladies and gentlemen, all these are what? All these are bullish directional trading. Means that for you to make money, the market must move. Even move $1 or $2. Okay, anybody any questions? Mr. Paul, Johnny, Jeffrey? Which one better will depends on your objective, your time frame, and things itself. I put all 16th of September as a reference, as a point. Okay? As a point of thing. Okay, as a point. So it's not all the strategies are just show and tell strategy. It's not optimized as per se. Questions, anybody? This is one of my student. Okay. February 2022. February. Can you see now? In a period of 3 days, he do 4 different trades. One, debit directional bullish, debit directional, far out the money iron condors, sell naked call, sell naked call, short naked strangle. This is my tutorial. It's what we call elite trader. We call it C market, trade to learn style of trading. This one is really good. This is what I call thinking trader. It means actually this guy what not? He simply trade all the different strategies so he can learn, experience different strategies. He's not looking for the best strategies to trade, to focus on. He learned all the different strategies that he can trade on, so that when the market comes, he will choose the best strategy to suit the market. Not you have one strategy and you trade all the market. So now before we go further, when it comes to option trading, the principles of winning and losing is based on 3 things. 1. Directionality. 2. Time decay. 3. Option premium volatility. Okay? So there's a reason why, as I recently explained, some of the students who are worried about, Thomas, I buy options. Options got time decay. Excuse me. Yes, options got time decay, not a problem. Whole world know options got time decay. But your concern is not so much as a trader. Our concern is not so much our time decay as our risk. Our biggest risk in today's trading now primarily is focused on what called directionality issues. For those who are taking my class, I will explain to you in more. Those people, my students, and who are taking my upcoming class, I'll explain to you more in details. Oh yeah, by the way, as I later on when I finish everything around 9:30, 10 o'clock, 10 plus, there's going to be a live market session. So kindly post the company you want me to look at now. Okay? Select all your companies you want to look at now. Time decay is a major factor for your winning or losing. Whether option shares or futures. Time decay is secondary. It only come to play if you are doing income trading. Then of course we trade multi-dimensional trading. Then all the above will come to play. Okay, this is the recent trade which I did for fun. Okay, I buy a trade for $1, a vertical spread for $1.05. I hold it for about 5-6 days. I may take profit at 207. Now you understand what I say? Listen carefully. When I buy a trade for $105, my worst case, how much you lose? I lose $105. I make 200. I buy to open 105. I sell to close at 270. So my profit is what? 165. 165 is 150% return over 16. That's the reason why I notice when it comes to option trade, minimum capital risk, minimum capital, lesser lose lesser, and highest return. So, ladies and gentlemen, if we go and trade options, and if we go and make Thomas, I might trade make 15% by nature. By nature, if you follow my income trading, my 7S income trading or 7S directional, you make 10-15% per trade. You have a failed trade. That means what? You're supposed to make 100% return, but you only make 10-15%. It's a failed trade. Of course, a bad trade, you lose money lah. Okay. Anybody, any questions regarding this implication? Minimize capital, therefore lose lesser capital, lesser risk, highest return. Anybody, any questions? Mr. Law? Christina? Roy? Roy, are you my student, or you are new here? If you care to share. Okay, fine. Good. Okay. So before we go further, this is our trade key style of trading. I repeat again, every time you think, I don't care whatever method you use, whatever underline you use, shredders, futures, options, spot, CFDs, or whatever, is based on 3 style of trading. 1, strategy based. Thomas, I trade breakout. That is strategy based. Thomas, I sell far out the money puts. That is strategy based. Thomas, I sell 90 days iron condors, sell delta 15. That is strategy based trading. Thomas, I do the wheel method. I sell delta 25 puts. Then once got shares, I will sell delta 25 call. Delta call. Vice versa. All these are strategy based. Basically, you have a strategy, you find a project for you to do. Okay, this is the one. The most common one, people try objective pay. Making money is not your objective. I repeat again. So what's the objective base? Objective, Thomas, I trading for my retirement. Thomas, my objective is value investing. Alibaba, say Alibaba, I want to buy Alibaba shares because I believe Alibaba share is fundamentally strong. Then fine. So you want, Thomas, I want to buy Alibaba share chips. So I sell naked puts. Thomas, I want to volume bottom feature Alibaba. So I buy a straight call. Okay, I buy a leap call June 2024. Okay, Mina. The objective base. Thomas, I do retirement. Thomas, I want to do a retirement. I want to buy ETF. I want to buy SPY ETF. I want to my retirement 10 years out the road. So I do. Yes, I sell in the money puts to get my SPY share cheap. Then in between, I sell 6 months, I sell 3 months, far out the money cover cost. Far out the money cover 6 month cycle or 3 month cycle. That's objective base. Okay? Anybody, any question regarding strategy base and objective base? This is important, ladies and gentlemen. Most of you have no choice. For those people who are starting off, you have to start with objective. You have to start with what you call strategy base. Okay? Anybody, any questions? Charles? Christina? Mr. P? Roy? So, the third one, market base, see market, trade market. I see the market tonight at 9:35. Wow, scalping opportunity. I in up intra candle. That is karma. Thomas, I enter my trade 9:45. By 10:15, half an hour, I will take profit, cut loss at 10:15. That is what I call intra-hour time-based trading, or you want time-based trading. Scalping basically look at the price action valuation, price action candles and things or you want to do long-term investing also can. Or Thomas, I see market okay, I will do a portfolio trade. Means I will do $20,000 of bullish trade, $15,000 of bearish trade, another $30,000 of income trades. Okay. This is the best one. Unfortunately, not many of you have reached a stage of evolution. Next, capital base. These are, oh, Thomas, I don't care what strategy. My budget per trade is each trade $500. Nothing wrong. So basically, instead of looking for what strategy, look for what the best strategy to trade. Is simply say that what is a strategy can you afford to do with your $500 or $100? So basically, you have a predetermined now. Okay, a predetermined. Thomas, I trade sell naked puts only. They're different. Sell naked puts is not predefined budget. Because you sell a put, you got share. You sell a put, you mean anytime you can sell assign early shares. Then you got share valuation. So you sell a put on Google, you sell a put on Tesla, you sell a put on Royal Caribbean. Hey friend, all the capitals are variable. Tesla is about $800. Royal Caribbean is how much? Okay, you sell a put on our friend, our good friend, say Google at 80 put, that's $8,000. But on the other hand, if I do Thomas, I base on trading with predefined risk. Each trade $100 per trade. Can I trade on Google? Yes. Can I trade on Amazon? Yes. Can I trade on Tesla? No. Why? Because your $100 not enough. So how much money trade Tesla? Minimum $500 or $250. Okay, so which one is better? All are great. All are fundamentally accurate. So for my upcoming class, is strategy based. Strategy based. One strategy based combined with capital base. So upcoming class, every trade going on $100 gross, $250 gross, and maybe one or two trades of $500. Depend on account size, of course. If account size is $500, if account size is $5,000, then do $500 per trade. I think it's not a good idea. Maybe if your trade most likely you should focus, you should do more $100 and $250 trades. Anybody got any questions? Nobody? Anybody? Right? Are you a trader? Edmund? Oh, you are. All of us are still learning, my friend. Now, what is 7S? 7S is a system is actually defined by me to be as idiot-proof as possible. Why strategies? Example, the upcoming class, the first strategy, the strategy you learn will be directional debit spreads. What are you trading on? Good shares, ETF, and index with good options moneyness. What's the market context? We are trading in a bullish trending market, confirm market that meet XYZ conditions. How much capital? Depends what you're trading on. If you trade on say Royal Caribbean $1. You trade Amazon $1. Thomas, are you sure or not? No. Yes, Amazon and Google is $1 spread now, because recently I think last month they split. Microsoft $250. So everyone got super trade. So what type of duration are you doing? We are doing intra-month trading. Means that our trades is 16 days to 35 days cycle. No more, no less. Please do not go and adapt my 7S. Teach you for intra-month trading. You will go and modify it. You go and do it or intra-year or intra-day. Then is don't come and blame me. A strategy optimized. Remember, every time frame have its own parameters. So every time you say you do a trade for 4 hours, do a trade for 4 days, do a trade for 4 weeks, all them are same 4 days versus 4 hours versus 4 weeks 4 hours versus 4 days versus 4 weeks. All of them will have different parameters. Yes, even using the same methods. So what are the entry requirements? Then what are exit requirements? Exit requirement for 7S normally about 2 to 4 different exit parameters. Okay, fast in. Okay lah, I will explain to you more later on, student. Okay. Anybody, any question for race 7S? So it's yes, no, yes, no, yes, no, yes, no lah. So it's meant to be as idiot proof as possible. It be designed for people to be idiot proof as possible. Thomas, you are trading 7S ah? No lah. My style of trading you don't follow me Thank you very much. Okay. Not because I cannot teach, you cannot take loss. Depends. Okay. For directional 7S you're taking, this coming directional trading is 16 intra-month, 16 days to 35 days. Intra-quarterly, 36 days to 100 days. Intra-fortnight, 8 days to 15 days. Intra-week, 2 days to 7 days. Understand what I'm saying now? Johnny, 7S is not based on time frame. Time frame is a subset of your 7S. So if I want to do an income trading, I teach you income trading, correct? That means I want to do intra-month, it's from 16 days to 35 days. It's not the strategies. It's the duration of strategies that were adapted for 16 days to 35 days cycle. Remember, Jay, same strategy for 4 days versus 14 days versus 4 weeks. Let's be honest, the parameters cannot be the same parameters, correct? Cannot be everything the same, correct? You can you cookie cut it out? This strategy works for 4 hours, work for 4 days, work for 14 days, work for 4 weeks, work for 4 months. Okay, cookie cut it out. Okay, you understand what I'm saying now? Anybody, any questions? This one is created by one of my students, thanks to Miss A. This one you can see here, for those people who don't read words, you can see the colors. One, what's the method? What's the strategy going to apply? Two, what's the freaking context you're going to do? Three, how much capital you need? Four, duration. Five, what you're trading on. Six, what's the entry parameters? Seven, what's the exit parameters? Anybody got any questions regarding 7S? Charles? Good, thanks. Law and Roy? Paul? Paul don't need. Paul is self-functioning already, more or less. Okay, before we go for, I'm the firm believer. I'm a firm believer of portfolio trading. This is a simple one. You notice, Thomas, you blank it off here. Yeah, because today's session is talking about directional trading. Let's say, Jerry, look at carefully for $5,000 bullish for $5,000 bullish account size. Every trade is $100. Okay. $700. You can do what? You can do 6 trades of bullish, 6 trades of bullish, 4 trades of bearish share can. You may say or Thomas, I can do 2 trades of bullish, 2 trades of bullish at $12.50 each, or 2 trades of bearish at $12.50 can can. That's why in my world of trading it's impossible for you to burn. When your account got burned, that only mean 2 things only. First thing, I will guarantee most of the time is what? You break all my rules. Over trade, over exposure. I tell you to put 1 contract per trade, right? You put 20 contracts per trade. 2, you have 50, 100 losing trades in a row. That's why your account got burned. The last one is very rare, because by the time you lose 20 trades or 30 trades, you definitely either you stop trading, or most probably you call for help. So for drop message to Michael, to Dave, or other people asking for help. So this is what I call portfolio based trading. You cannot put all your eggs. Thomas, I think the bullish. I put all my $10,000 into one trade. Ladies and gentlemen, if you do that, nothing wrong with it. I call you a gambler. Okay, at least if I were you, I tell you to go casino. Anybody, any questions? I got one yup coming. Okay, I got one new guy coming. Call you what? Yup. Are you a regular or old friend of mine, or you are new here? Angie and Dave, stand by some directional trades. So repeat again. Objective strategy base, the most popular. Teach you to trade nickel puts based on delta 15. Selling 60-day cycle. Nothing wrong. I can do that. But ladies and gentlemen, for those people who complain I don't teach nickel puts, nickel calls, cover calls, don't worry. I got upcoming quick starter class, quick starter workshop for all this program already. Objective base. Thomas, I want to trade based on my retirement 5 years, 10 years, or based on my children educational Harvard education fund 14 years down the road, or value investing or whatever. C market, sorry. C market, trade market is portfolio trade. Any methods here from intra 5 minute scalper, intraday scalper to long term bottom fishing or value investing to portfolioization. Then lastly, capital based trading means that every trade I go in must be based on $500, $1,000 or $50,000. Okay, good. Thanks, Yap. So any trading experience? Please ask. Facebook. So let's go inside. So before we go further, Thomas, what type of market analysis what type of analysis available? These are the different trading style analysis you're going to have. One, thinking, believing, expecting. Very common one. I follow Elon Musk, sure make money one. I invest in stable coin. I think, I believe, I expect stable coin to be safe. Nothing wrong. I invest in GME. I expect GME GameStop to go up to $100,000, whatever it is. This is what I call most of you are thinking, believing, expectation. Okay? The second most common one is predicting. Thomas, on the basis of ABC pattern, I expect the XYZ to come. That's why I call predicting. Oh, based on what I read, Facebook should go up by $50 after this earnings. This is based on what? Based on I believe I expect analyze is because based on Matt Kramer said so what. Okay. Then another type of trading style is what is more. This is what I teach I will teach all the time, and I will teach you in the initial phase confirmation trend trading. What's a trend? A trend a short-term trend is what 5 days higher high, 5 days lower low. That's the shortest trend in Dubai. So if you want to do a 30-day trade, your confirmation candle cannot be 2 days, correct? Your confirmation trend must be at least 5 to 10 days. So how to see confirmation, how to see trend? Don't worry too much. For those who taking my directional class, I'll teach you how. Then the last one, which my favorite is quantitative options analysis. It's based on option pricing. Every option has its own strike price. Every option has its own value. Every option has its own time. This is one of the most powerful trading. This type of trading strategy, you can trade you can trade using quantitative option analysis without looking at trend line, support line, chart patterns or news. Okay? So yeah, what type of trader are you? Roy also the same. Okay, any question type out. Roy Yap and who else? Edmund Law. What type of trading are you doing now? Care to share? Most of the time, normal trader is bullish, bearish. I repeat again, based on technical chart fundamental analysis. But wait, fundamental analysis is not suitable for tactical trading. Means what? Anything less than 6 months based on FA is not suitable. Fundamental analysis is based on company earnings report and is best for what? Intra-year or multi-year trading cycle. Normal, So next. So, but Thomas, how you trade? This is how I trade. This is a 6th dimension of trading market opportunities. Ultra up, bullish, bearish, sideways ranging is considered normal market. Okay, then we got extreme movement up, extreme movement down. That is also the one is considered abnormal market. Is well, it don't happen very often, but happen often enough for us to trade in the market. Okay, like Facebook, like that, MetaTrader, maybe got some bad news come out and the damn thing drop $10. That will be ultra down because the chart patterns, the trend lines is not showing you the abnormal movement. Abnormal movement means up. Abnormal, exceptionally large movement is they have no correlation to the last 20 days price action candles. Okay, then I got options premium volatility. Option premium volatility, as I said earlier, is a style of trading using option pricing to calculate how to trade. So fundamentals is for multi-year cycle, because why? Earnings report come out every 3 months. So in order to have a good fundamental analysis, you need to calculate go back at least 4 months, 6 months fundamental analysis. Therefore, analyze 1 year, 1.5 years back in time. So your trading duration must at least 6 months, 9 months, 1 year, 2 year cycle. Technical okay. Fundamental analysis are also called historical. Okay. Then technical analysis is past time. Thomas, I based on the last 60 days candle or the last 6 months candle is past tense. So based right. So most of the time, technical analysis is good for what? Especially go based 60 days, 90 days, or 6 months candles is based on what swing trading is the best. Then another one is called price action trading. It's called present tense trading. Why called present tense? Because price action candles is seeing an example now is 9:30, correct? Seeing 2 or 3 candles or 4 candles at the opening bell to do a scalping trade. That is called price action. Price action means I see the last 3, 4, 5 candles only. 10 at best. I do not go and check. Okay, my candles are draw support resistance line based on 10 days high, 10 days low. That is not called price action trading. Price action trading means trading with a few candles, now candles. So price action trade is called present tense. Options quantitative analysis I call futures tense. Why futures tense? All options are priced for futures movement. If you go and buy options for January 2023, the price you see down there is a consensus between the buyers and the sellers. Remember, Thomas, why you should buy seller accurate? Buyers want to buy cheap, seller want to sell expensive. So if they come at a consensus price, that means that the buyers and sellers agreed that the potential range of movement from now up to January 2023 is between the buyers and sellers price valuation. Anybody, any questions regarding these fundamentals, technicals, price action, and quantitative? Anybody? Yep. Charles, Christina, Roy. What's so powerful? What option or quantitative option analysis about? It's based on option price premium. Every option must have a price. Every option have its strike price. Every option have its number of days to expiry. These 3 add up together, combine with the current, will give us a good the market, the buyers and sellers market expectations of potential range of movements. Okay, and notice the word this one can be traded by itself. Don't need to analyze chart patterns to setting itself. Okay. Just now I mentioned to you the 7S crap. Okay, 7S crap. So now I show to you what is, from my point of view, a good trader must be aware of a thinking trader. Of course, you started off at 7S what method, what time frame, what budget, everything lah. But once you settle down on the 7S already, then you need to be follow the way of the thinking trader. You notice or not? You notice the strategies is last market opportunity first Historically, when you normal traders strategy come first, market come second, you come last But in my world of trading, in my world of real thinking trader upstream strategies are just tools So which one more important? It's actually you and your objective more important Of course, with objective based your skills, your expertise, your knowledge, your risk capital, how much you want to risk, what's the time frame. Then from there, Thomas, I want to invest in, I want to hold for 5 years, then buy shares. Thomas, I want to do some scalping trades. Okay, then normal scalping trades, intra-week. Today is Tuesday, correct? I want to do a trade for Friday night. Then I think that means I use options. So can I buy a straight call? Can I buy a vertical spread? Can I sell a call? Can I sell a put or vice versa? So that's why I said strategy always come last. What is a strategy? A strategy is just a vehicle. What's a market? The market is all the roads you want to drive. Then what about you? You the driver. You the driver, your skill set. What can you afford? So when it comes to strategies, whether you drive a Ferrari or drive a Hyundai truck or drive a BMW, depends what's your objective. Okay, so ladies and gentlemen, the strategy is very powerful. Ferrari guarantee go 280 kilometers per hour. Doesn't mean everybody can drive Ferrari at 280 kilometers successful safely. The car can go, but whether you got skill set or not, that's another story. Whether the roads, the market let you to have so much profit or not, that is another story. Anyone got any questions? The way of the thinking trader. If you want to call it agile trader, go ahead. Agile trader means what? Objective based trading. What's the objective? My goal. Then you structure the trades to suit your objective. You choose the right strategies, choose the right underlying, structure the trade to suit everything. Suit your objective and your most important is the risk budget excuse. Questions? Intraday, intra-week, intra-month, intra-quarterly, passive, prediction, intra-year. These are some of the time frames to teach. For the coming month, most of the time we are focusing on intra-month 16 days to 35 day cycle. Thomas, don't have here is missing intra-fortnight. This one is from 5 years ago one or 4 years ago one. Since then, market get more efficient. So Thomas, what's the difference between intra-week and intra-fortnight? 7 days, 14 days, 7 days different only But the entry parameters, exit parameters, they can be exactly the same now. The answer is no. The shorter the time frame you trade, the more aggressive you are trading. Questions? So Thomas, okay, now this is a picture of shark. That's ladies and gentlemen, my style of trading simple. I teach you to be a pilot fish, not a single fish. To teach you to be a school of pilot fish, you can have you get your school of 10 pilot fish. 5 can eaten. Do it too much, you still got 5 left. Your job is not to maximize profit. Your job is to learn to follow the sharks of the market. So the shark eat big, we the small pilot fish, okay, will follow the shark, eat. So that's the reason why I tell you not to be smart Alex. Try to predict the market. You're not a shark, do not behave like a shark. That's why people got burned, because they think and behave like a shark when they are not a shark. Questions about shark and pilotfish? Anybody? Law question? Yep, any question please ask. Huh? No. Johnny, you don't be a shark. Yeah, don't be a shark. Because to be a shark, detect you try to move the market. We don't want. Okay? Long-term value investing, my advice to you want to do 3-4 year cycle, please go and time average it, dollar average it using options to buy your ETF cheap. Do not, I know you are still young, Mr. J, but you don't do it. Thank you very much. Okay? Unless you got a lot of funds. When I say got a lot of funds, that means we're talking about one at least a few $1,000,000 and above lah. So every share investment going put in $100,000 okay, spread it over 20 10 20 100,000 spread over 20 30 companies If not, if your account size is 50k 100k 200,000 then invest in ETF, safer. The market will go up, the market will go down. The long term, the ETF, the index ETF will go up. Okay, Jay. Now, before somebody, I want the best strategies. I guarantee you, with my last dollar, all strategy are the best strategy. Okay, but as you know, Rika, as long as you are a consistent winner. Thomas, are you sure not? This strategy is horrible. Every time I lose money, if you're German, if every time that strategy lose money, ask yourself, when you lose money, your money go to where? Remember, when you buy a trade, when your strategy call you to buy, somebody must sell you, correct? And you as a buyer lose money, the seller must make money, correct? Your money do not go inside toilet bowl. Even toilet bowl got even toilet in Singapore toilet recycle the new water. Okay? So before we go further, these are the basic things you need to go out. Trading to win OPM money. Means other people's money can come for a few things. Trading knowledge, understanding the market, your skill expertise. Most of you like to focus on trading knowledge. I want to have the best method, best knowledge, best method. I tell you, you are dead. Trading knowledge is the one the easiest thing to acquire. Don't believe me? Ask your Apple ask your Sui ask your Blink ask Google what's the best method to trade FOMC. Oh, by the way, anybody interested to do a FOMC live session? Okay, it will start at 2 a.m. or 2:30 a.m. in the morning. If anybody interested, drop me a message. If enough interest, I will organize one. Okay, the consensus is between 50 basis point or 75 basis point. I'm hoping for 100. Okay, so ladies and gentlemen, of all the three here you see here, the ultimate one is your skills and expertise. Your skill and expertise don't come out. You have trade knowledge, but you don't understand the market, you die. You have your once you got trade knowledge, you understand the market. Then after trading enough trades, then you got skill expertise. So once you got skill expertise, implied you what it means I will guarantee you got skill expertise in trading. I guarantee your trading knowledge, understanding market is already there already. It's already there already. If not, how you got skill expertise if you don't know how to trade properly? So start focusing on trading knowledge. Stop looking for the best strategies. Stop looking for the hidden secrets. Okay? Whatever secret you have, the big boys will know all. Okay? That's the reason why, because of the fact of the big boys, we the small retail investor must learn to be a pilot fish to follow the big boys. We cannot be big boys. So these are some of the trades available. Okay, this one is quite old, but I don't mind. It's a key to mind. Earnings, normal directional trade, normal income trades, post earning trades, etc. I won't talk too much about it. So any questions? This is not from Singapore, it's from America. Currently now, to be fair to the Americans, they are not only one. Singapore pools make multi-billion dollars, every year make billions and billions of dollars. For why? For people who have a retirement plan based on Toto and Big Sweep and 4D. Nothing wrong with buying Toto and Big Sweep 4D, but you cannot rely them for retirement. Any question, anybody? I got upcoming class starting this week. Okay, my next class will be somewhere in October or November this year. Okay, this one is exactly what you can see. Learn to trade option from start to finish in 6 weeks. So in these 6 weeks, you have opportunities to do 10 up to at least 10 trades or more. Okay, do lah if you want to do lah, but if not, experience 10 trades or more. For those people who got live account, you can start doing live trading, because even you lose 10 trades in a row, I guarantee you still can continue trading as long as you follow my rules. Anybody any questions? For those public members, okay, like Roy and Yap like that, if you need any questions or you want to have a private discussion with me, okay, drop me a message over here. My number is over here. Edmund also the same. I've been trading US market more than 23, 24 years already. Okay, I've been trading more than 22 years already. 23, 24 years and more. Okay lah, 22. Trade US market lah, Singapore market. Okay, Thomas, when you start trading, investing or trading I bought my first silver gold coin at age of 21. I bought my first unit trust age of 21 also. Anybody any questions? Roy, Yap. Yap. Any questions? By the way, tell me what you are. Okay, now ladies and gentlemen, why don't we take